What's up everyone, it's Karthik with MoneyVest. So this is going to be your complete technical update on the upcoming week. We're going to take a look at the Magnificent 7 stocks. So we're going to do a full technical breakdown on the S&P 500, the NASDAQ, Apple, Amazon, Tesla, Nvidia, Meta, Microsoft, and Google, as well as break down the calendar for what is going to be a very, very important economic data driven week, because we do have the unemployment numbers coming out, as well as manufacturing index, and Jerome Powell is also going to be talking on Monday on September 30th to pretty much close out this entire month. So hope you all are doing great, and as always, make sure that you drop a like and subscribe to the channel, and please do me a favor and share this video with your friends and family. Copy that link, paste it in other groups that you can you're part of, and other people can also benefit from this information. So going over to the calendar itself, starting with a fresh week here, and pretty much to close out the entire month of September, we've got a few other FOMC members talking, and the very important chair, Jerome Powell, is going to be talking at almost 2 p.m. Eastern on Monday, September 30th. I'll see if I can be live during that time to cover what he's talking about, as well as the market's reaction. Then we've got some manufacturing index numbers coming out, and very importantly, the JOLTS numbers are going to be released as well on Tuesday, October 1st at 10 a.m. Eastern. That is going to be a very important unemployment print, because that's going to tell us how many job openings there are in the US, and the consensus is for us to drop to 7.64 million job openings. And as we know that we're getting very, very close to the number of unemployed persons, which has also increased by over 1 million people in the last 12 months, which is over 12.5% increase in the last 1 year in terms of that unemployment growth. And if the job openings in the US drops below the number of unemployed persons in the US, that ratio is going to fall below 1, and which obviously is going to create even more problems with regards to where the economy is headed, because that would simply mean that there's not even enough jobs for people searching for jobs, right? So unemployed persons now is more than the job openings itself, which of course is a very deteriorating picture about the overall economic condition, and more specifically the jobs market over in the US. Now this right here is going to be the ADP non-farm payrolls, which is going to be for the month of September. That is also going to be coming out. The expectations are for 124,000 jobs added in the month of September. We got crude oil inventories also being released on Wednesday, October 2nd. And Thursday, we've got continuing jobless claims, initial jobless claims that comes out every Thursday, as well as the Fed's balance sheet, which is now expected to be sitting at just over $7 trillion. Some other manufacturing index and prices, as well as other FOMC members talking as well. And now the more important day where I'm going to be live is going to be the first Friday of the month of October, October 4th, which is going to be the day of unemployment. So we got non-farm payrolls. Expectations are for 144,000 jobs added in the month of September, and the unemployment rate expected to stay steady at 4.2%. So that is what the markets are going to be paying attention to very, very closely, because if you do see any type of an uptick back up to 4.3, 4.4, 4.5 or higher, then of course there's going to be some concerns regarding a hard landing in the US once again. And right now there's a big debate whether we're going to see a recession or not. Tom Lee still expects a no landing, or a scenario where the Federal Reserve is perfectly going to orchestrate a scenario where inflation is down, unemployment is lower, and everything's going to be perfect. There's going to be growth with a very, very solid macro backdrop. However, the economy will tell us in the next few months the current state of whether that's going to be the case or not, whether there is going to be stability in the jobs market, or if there's going to be an increase in the unemployment rate. So that's going to be coming out in the first Friday of the month of October, October 4th. I will be live to cover those numbers as well. Now, don't forget that we also do have Tesla delivery numbers coming out on October 2nd, Wednesday. Obviously, it's not going to be part of the macro calendar, but a very, very important catalyst for Tesla itself, and more specifically, the overall state of the electric vehicle demand, and how Tesla's doing over in Europe, the US, and China, because they're going to be releasing their third quarter delivery estimates, essentially the numbers, and right now the estimates are 460 to as much as 470,000 vehicles. And as we know that the markets are pricing in for a slight increase of about 6 to 8% on a year-over-year basis for Tesla deliveries. Now, coming over to the technical analysis on S&P 500 and of course the NASDAQ and some individual stocks. So this right here has been the S&P 500 since September, October of 2022, since that bottom from back in 2022 bear market. We've been on a very nice consistent uptrend overall for the markets here, and every so often we've seen these nice little pullbacks and these corrections. That's also happened on the back of the MoneyVest index dropping down to low threes. So if you come over to where we are, we're well over 4.12, and every time we've come down to those low threes or sub 3 levels, that's been a very good buying opportunity, and that's been highlighted over here. So those have been these drops here in the market where those have sort of created a very good risk reward profile for the markets. If you zoom in a little bit further, you'll notice that we did have a bit of an ascending triangle. So again, higher lows coming in with a bit of a horizontal resistance, and then we broke out for S&P 500 here with the new all-time highs coming in at well over 5,700. So moving forward, going into October, as we already know, volatility is lower. It's back in the 15s, 16s, and we did see a bit of an under the radar spike here in volatility on Friday, up over 10% as the S&P 500 continues to trade sideways. And going into October, we're now less than 40 days away from the elections. I do believe, and as what is being pointed out with the VIX terms futures as well, the term structure, which is in backwardation, if you look at the first two front contracts for M1 and M2 for volatility, it's in backwardation, so it's negative 2%, and that still suggests that volatility expectations are higher. In other words, markets are expecting for higher levels of volatility going into October, especially pre-election. And then post-election, we're seeing a bit of a volatility crush as that uncertainty is going to be behind us. So going into the next month here, in the month of October, I am really going to be strapped with cash because there is going to be buying opportunities, in my opinion. And when there are going to be those bargains and those deals, we're going to be ready to take advantage of those opportunities once again. So I do expect maybe a little bit of consolidation sideways, coming back down to maybe retest this support once again. But in case we see a bigger drawdown or some type of a pullback, I wouldn't be surprised to retest this higher low or possibly coming down to this ascending support as well. And the lowest would be right about there. That's going to be a support level that we have validated in the past couple times already. This right here, very strong support, as well as over here. That's going to be sitting roughly at around 5,400. 5,400 is going to be a reasonable target for me personally, where I would feel comfortable to once again start buying back into the market and be a lot more aggressive. And I could see the MoneyVest index also dropping down to low threes again if we do see a 300-point drop in the S&P 500. So that would be the expectation. Of course, if nothing happens, if none of this happens, we can continue to consolidate sideways and again make our way higher and higher to new all-time highs, possibly get up to that 6,000 target where many expectations are pegged right now for Wall Street consensus, right? 6,000 is the next target. The S&P 500 is what, where many people are believing that it's going to get up to. So that's going to be the expectation for S&P. Same thing with the NASDAQ. As you can see, that it's been on a very nice consistent uptrend, higher highs and higher lows over here. As you can see, and if you zoom in a little bit, we did have a lot of weakness, and the NASDAQ is nowhere near close to its all-time highs. That's sitting at well over 18,600, so we still have a little bit of ways to go. But this right here, of course, was the lower highs. Then we had a little bit of those lower lows. So at one point, it did seem like we were making some, very significant downside, lower highs and lower lows, so there was a bit of a downtrend. However, we did mark a higher low here, so that was a nice little, back to the upside, and we're also making now a higher high. So this right here is a higher high, so you can argue that, okay, the trend has very much shifted, and we're making a nice little uptrend for the NASDAQ once again. However, the lagging factor, the fact that it's nowhere near close to its all-time highs and the technology sector continues to lag, goes to show that, okay, there is some weakness in tech. There's still a risk-off environment where utilities and staples are the ones that are leading this market higher, as opposed to technology, which is lacking leadership, and there's not really a lot of dominance among technology stocks that's leading this market higher. So as a result, there is still a bit of a risk-off environment in the market in anticipation of a potential hard landing. And if that scenario kind of goes away, if hard landing in a recession's off the table and interest rate cuts are indeed orchestrating a soft landing, inflation's coming down, unemployment stable, then I can expect NASDAQ to eventually make its way back up to all-time highs, potentially to new all-time highs, possibly up to 19 to 20,000 as well. But before we get there, I think this right here is going to be the trajectory that we follow. There's possibility that we come down in October here, potentially down to 17,000, 17,800 to be precise. So whatever that level ends up being, around 17,005 maybe. And then of course, continue to trade in this pattern as we move higher. In a very rare circumstance, if you drop further below this, higher low and sell off even further, the level that I'll be watching is going to be closer to here. That's going to be 16.6, and that's going to be aligned with this higher low, as well as this horizontal support that we validated in the past. And that's where I will once again be a lot more aggressive in the markets moving forward. Now, this right here is the S&P 500 cycle in election years, and this is where we are going into election years. You can see that October tends to be weak. This is election year cycle, and again, election year cycle last 10 years, last 5 years, and every single time you'll notice that we have seen a little bit of a drawdown going into October, or September, and October tends to be pretty weak. This is pre-election timeline, and then post-election, once that catalyst is behind us, we tend to rally very well going into November and December. Something to keep in mind and get your cash ready now. And this right here is going to be Nvidia, starting with Nvidia stock, still well within the context of this lower high and this lower low. We did have a bull flag breakout, so pushing higher, consolidation sideways, and then of course a breakout. And this right here is the lower high that we're kind of tapping up to, and two couple red days in a row. And this right here is going to be that support range between 113 and 119. So would not be surprised if you do get, again, a little bit of consolidation sideways, maybe coming down to 113 again. I've got some calls sitting at 112 that are already in the money by over $8 a share. So we'll see what happens over the next couple weeks with Nvidia, whether we can close below 120, 113, possibly down to even lower levels. And that's going to be a very, very strong support level to watch for Nvidia in the low 100s, as we already know. Of course, in the circumstances that we break out to the upside, the resistance to watch is going to be all the way up to $130. That's going to be aligned with over here. We consolidated sideways for quite a few days before finally breaking down to the downside. So that's going to be the breakdown right now, still well within the context of a lower high and a lower low. This right here is going to be Tesla, and Tesla, as we already know, we're starting to already break out to the upside. However, coming up to a very, very important level of resistance for Tesla in the 270s to as much as $300. I've already done a full detailed analysis on Tesla, so make sure that you already check that out, because it's going to help you greatly to better understand what strikes and what options and what's the net bias between options traders going into the next couple of weeks here for Tesla, because the next 3 weeks are going to be very critical with the delivery numbers, with the earnings, with the robotaxi event. And I could see Tesla in the 270s, 280s easily getting up to $300 in the next couple of weeks here, as there is a lot of sentiment going into these next couple of weeks for Tesla. So support levels 250 down to as low as 212. Resistance going to be sitting between 270 and 300, as we've already discussed. Apple also very much similar to the NASDAQ in a bit of a consolidation and a symmetrical triangle pattern, coiling in with a potentially bigger move coming in very soon. 217 is going to be that support down to 206, and a very important resistance right above there, sitting roughly at around 230, 234 for Apple. Going over to Amazon, Amazon's got a huge resistance here at $200. We did, get up to as much as 190, 191, and then coming back down. Of course, this has been a very, very strong rally for Amazon altogether. Very overbought conditions as well. So would not be surprised if you do see a little bit of weakness there for Amazon. The first support is going to be sitting right there. We validated a couple times, once here, twice over there. And that's going to be sitting roughly at around $180 a share for Amazon. And the next target is going to be down at 171. That's also a level that we validated multiple times in the past. Very, very nice support there. So that's going to be that next target to watch. So levels to watch for Amazon. Near-term support sitting roughly around here, around 180 down to as low as 171, and right now resistance sitting at 189 to as much as $200. Going over to Google, and Google is also kind of fighting off that area of resistance here. So this right here is going to be that bear flag breakdown for Google that we identified, then of course bouncing right back up from that area of support at 150s, and right now once again battling inside this area of resistance at around 165 for Google. Microsoft also had a bit of a head and shoulders, but we didn't quite break down below this neckline here in the 400s. Instead, we bounced off of that support very well, pushing back higher to well over 442, starting to slide down lower just a little bit, and that's going to be that support level to keep in mind, with a resistance that we're kind of tapping up to now, sitting at the 430s for Microsoft. And then finally, Meta Platforms is pretty much near all-time highs, so not a lot that we can break down, but a lot of consolidation happening here. Support level is going to stay put at 540, down to as low as 480, down to as low as 458 and 420. Those right there are going to be a few support levels to keep in mind, but we're pretty much trading at all-time highs right now. So that's going to be all for today in terms of the technical breakdown. And the bottom line is, my message to you: be ready with cash. I'm about 20-25% cash exposure right now, just about getting ready for some deals. If the volatility does spike, if the markets do correct 5, maybe 7, as much as 10%, some of the levels that I've already identified, risk-reward ratios get better, I will be ready to deploy capital into the market, whether it's buying straight up stocks at bargain prices, at discounted values. And we have a 37 stocks and ETF shopping list, which includes all of my buy targets, my light buys, heavy buys. So if you want to access that, you can access that through our Patreon and our Discord with that 16% annual discount that literally expires after tonight. So today is the last day if you want to take advantage of that. And also, we'll be ready to sell some puts at stocks that I want to own for the long term as well. So as always, happy investing, and I'll see you all in the next video.